Hello. Very good morning, everyone. How are you all? Super. Okay. Last class, Ind AS 37, we completed. Have you done some questions? Of course, no. Correct na? Chaliye. Okay. Then we started Ind AS 10. We have done some examples. Example number 1 to example number 6. Any doubt in that till now? I think no doubt. Ind AS 10, whatever we have done, you have understood. Simple. Let us take some more example. Okay. We have done up to example number 5. 6. Example of 5 we have done. Okay, the last example was example of 5 about machinery. Right? Land or machinery means property, plant and equipment. Okay? Okay, understood. Then let us come to inventory now. Can I take some examples of inventory? But on example number 6. Once again the same. This is reporting date. This is date of approval. Date of approval. And suppose there is some inventory whose cost price is equal to 100 and NRB is equal to, let's say, 120. So what will be the value as per Ind AS 2? We have not done, but you know AS 2, it will be 100. It is cost price or NRB. NRB means what? Don't say me the full form. Huh? NRB is net realizable value. Everyone knows. What is the how to calculate NRB? It is estimated selling price minus estimated selling expense. It means, can I say it is a mere estimation? At what price it can be sold in the market? At what price the inventory can be sold in the market? Correct? Understood. Now what happened before approval of financial statement? It was actually sold at rupees 80. It was actually sold at rupees 80. The adjusting, non-adjusting. Adjusting, non-adjusting. Adjusting event. Pakka. Huh? It was actually sold at rupees 80. So it will be adjusting event, non-adjusting event. So you are saying adjusting event. Adjusting event. Okay, sir. Adjusting event, which is correct. 100% correct. It is an adjusting event. Why? Because can you say we need to estimate the selling price and actual sale price, give the evidence of that estimation only. And if you know the actual sale price before approval of financial statement, that should be informed to the user of financial statement. Got this point? 100% correct. Then let me take one more example. If I say example number 7, same inventory and the cost price is equal to 100 and RV is equal to 120 and a fire occurred due to which inventory damage, correct? And now because of that reason, now we are expecting, it is expected that it will be sold at rupees 80. The adjusting, non-adjusting. Now it is non-adjusting event. Very simple. It become non-adjusting event. Non-adjusting event. I think no doubt. One question is there is one question in ICS study matter. I think it is in Ind AS 2. I think so. Means Ind AS 2 related with what? Ind AS 10. In the same example, whatever example number 6 they have given, they have said that due to market fluctuation, due to market fluctuation, the price now become 80. Due to market fluctuation, the price become 80. Understood what I am saying? Means they initially estimated what? 120. Then subsequently due to market fluctuation, it become 80. Now it is adjusting or non-adjusting. Now the doubt came here only ki if suppose this particular point has been given, the students are confused. They think that market fluctuation occur after what? Balance sheet date. Just try to understand what I want to say. Every businessman knows about the inventory position or not, correct? And they know about what is going to happen in future. For example, let me take my example. When the new scheme of syllabus came for CA final, so I was having a stock of my Ind AS Saaransh book. There was a stock of 500 books, correct? And new scheme, that time the scheme was announced 6 months before, correct? And the first attempt was what? For the new scheme of syllabus, May 2024. And 6 months before we got the information that from May 2024, the new scheme of syllabus will be applicable. So can I say, I need to change my book? We got 2 chapter deleted and 2 chapter added, new chapter added, 2 old chapter deleted and 2 new chapter added. So can I say from May 2024, I can't sell that book, but I was having a stock of what? 500 books. The information was with me. And can I say because of that reason, can I sell my book at the same price? So I have reduced the price. Means if the price was that time 1200 per book, per set of book, then I make it 50% discount. Why? Because I know that after May 2024 it will become obsolete. It will become obsolete. So can I say businessman knows about the market fluctuation and that condition was available on reporting date. That information was available on reporting date. And they were knowing that of course due to market fluctuation the price may fall. The inventory might be of that type. Can I say the inventory might be related to some technology? And in technology means for example mobile etc. If the new technology will come, then of course the market price will go down. For example, right now if you are using iPhone, so iPhone 16 came, so the price of iPhone 15 will automatically what? Reduce. So that information known to everyone. Got this point? So due to market fluctuation, it does not mean that information, that condition was not available on 31st March, and therefore this will be also what? Adjusting event. Why? Why? Because what is the meaning of NRV? NRV means estimated selling price. Means at what price it is going to be sold in the market before what? Before approval of financial statement only. Before approval of financial statement, at what price it can be sold, and it will be sold in future only. So now that information came to us, due to market fluctuation, the price become what? 80. So of course the condition was there on 31st March, and therefore it will be an adjusting. There is a lot of confusion in the mind of a student. Why? So therefore I have taken this example so that now if you revise, that doubt should not come. So even though due to market fluctuation, it will be what? Adjusting event. Some event occur after balance sheet date, for example, due to fire or due to some, they have given some more information that one more question was there. One of the competitors introduced some new product after 31st March, and because of that reason the price fall down. Quite possible. So that information came after what? Balance sheet date. So that become what? A condition arises after balance sheet date, that therefore it become what? Non-adjusting event. Got this point? So I think these two example clear. These two example clear. 6 हो गया, 7 हो गया. Now coming to example number 8. 31st March, date of approval. Suppose there was some legal case which was pending and you applied Ind AS 37 and you have created a provision as per the best estimate available on 31st March. Correct? And suppose you have created a provision of 2 lakh. You have created a provision of 2 lakh. Now, can you say case was decided what? Case decided before approval of financial statement. Got this point? Either it can be what? In favor of company or it can be against the company. So it can be against the company. It can be in favor of company. It can be in favor of company. Even though we created provision, it does not mean it will be, the case will be decided always against the company. It is quite possible case is decided what? In favor of company. In favor of company, nothing is payable now. Then no amount is payable. And against the company, the amount can be either more than 2 lakh or less than 2 lakh. It can be equal to 2 lakh. Correct. That will depend upon the information given the question. It can be, suppose the amount is 2 lakh 50,000. The compensation payable is now 2 lakh 50,000. If it is against the company, it will be what? Adjusting or non-adjusting? It will be adjusting. Adjusting event. And if it is in favor of company, then it will be what? Adjusting event. In both cases, it will be adjusting event. Understood? So if it is in favor, reverse the provision. If it is against the company, then change the provision, either increase or decrease as per the information given in the question. Very simple. Correct. One point, when we have done Ind AS 37, that time we say that estimations should be based on management judgment and it should be supported by event occurring after balance sheet date. So this was the point. Whatever estimation you have taken into consideration, that should be also supported by any event occurring after reporting date. Correct? It means the provision is not 2 lakh. Provision can be what? 2 lakh 50,000. It can be nil. It can be nil. Understood? Have you understood this point? Simple na? It's very simple. Correct. Now, let us take one more example. Example number 9. This is one example. This is actually once again an example of CA Inter, but I like this example very much. I like this example very much. Therefore, I am taking this question. Suppose there was a debtor of rupees 10 lakh. Understood? Debtor of rupees 10 lakh. Now, check received. Check received dated on or before 31st March. Correct? Means check received after what? Reporting date. But the date of check is what? 31st March or before 31st March? Have you understood? Correct? Got this point? Badao. Adjusting or non-adjusting? It's a non-adjusting event. A check is dated what? 31st March. Why? No, no, check we received now. Then what happened? Check is dated what? Just try to understand. You are saying adjusting event, but your client will say what? You need to convince na. You need to convince. You are saying no, 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 sir. It will be. So they will be not convinced. Check dated. What accountant will do? Normally, accountant, not chartered accountant. What accountant will do? They will see the date, and as per date, they will pass the journal entry. Normally, this is the point which is practical scenario. Normally, it happens practically. Whatever accountant will do journal entry, they will do journal entry as per the date of check. They receive whatever the date they receive, okay, but the date is what? 31st March. They'll go to 31st March and they will post the journal entry. Correct. Now you are saying it is non-adjusting event. It means you reverse that journal entry. But before reversing, you need to convince what? The management. How can you convince? Bolo? Means you need to convince the examiner. Now you said it is what? You are saying it is a non-adjusting event, but you need to give the reason. Hmm? But the amount was receivable on 31st March or not? Correct now. We receive a check dated what? 31st March. There might be some delay in receipt. What is wrong in that? We can decrease on 31st March. Chalo, I'll change the example. Means just try to understand. Your answer is correct. It is a non-adjusting event. But मजा नहीं आ रहा है. मजा नहीं आ रहा है means can I say it is not a best answer. Are you able to understand? So I just want from you only give me the best answer. You reach to some stage. Some stage you have reached. But then also whatever answer you are given, I can put a cross question. So I'm just giving I'm asking you cross question. Whatever you said, let me give one more example. 31st March, date of approval. Now you receive one check. You receive one check here, correct? And it was deposited here. It was deposited here. Understood? Cross question. Understood why I put this cross question? You are saying that it will be deposited after 31st March because it is deposited after 31st March. Then therefore it will not be passed and will not do any accounting on previous this financial year, this reporting period. But now you receive one check, but it deposited after 31st March. But you'll pass journal entry in which reporting period? Means this current is, let's say this is 23-24 or 24-25. 23, 23-24. So I may deposit any point of time. Correct now. Deposit is not at all important. Deposit is not at all important. Are you getting? You say that it will be deposited after 31st March and therefore it is a non-adjusting event. Your answer is correct, but I'm not getting the best answer. Your answer 100% it is a non-adjusting event. No doubt about that. No doubt about that. Chalo, I will only give the reason. When this question was asked in CA enter, what institute has given the answer, and that was the best answer. They have just given the answer by putting the definition of asset. Now, what is the meaning of asset? What is the meaning of asset? Asset means any resource under which asset means any resource which is controlled by the entity and which will provide what future economic benefit. Correct? Understood? So it means there are two conditions. First is what? Control, and second is what? Future economic benefit. So can I say on 31st March it was not received and therefore it was not under the control of the entity. and therefore can I say this check cannot be deposited on 31st March or cannot be endorsed to any other party on 31st March because it was not under the control of the entity. Therefore, it will not meet the definition of asset. Therefore, it will not meet the definition of asset and therefore it cannot be recognized as an asset on 31st March. Correct? Your answer was 100% correct. Understood? But this point, I am not saying your answer was not correct, but they have linked with the definition of what? Asset. They have linked with the definition of asset. I think now it becomes thoda sa best answer, become more better answer. So this institute want how you are giving the explanation, how you are giving the explanation. So the student who is giving explanation in this way, can I say will deserve more marks? Will deserve more marks. Once again, what I am saying, your answer was correct, but it might not be best answer as per ICI. Got this point? I hope you have understood. Let me change the example. This was not an example. You can remove this example. I think you have not written now. Chalo. This is clear. Now let me check one. Let me give one more example. 31st March, date of approval, debtor 10 lakh. Now what happened? Check dated on or before 31st March was collected by collecting agent. It can be employee, it can be bank, it can be any other agent. Correct? They have written collecting agent. Before what? 31st March. But received by company after what? 31st March. Have you understood the question? Here check dated 31st March or before 31st March was collected by collecting agent. It can be bank of the authorized bank of this particular entity, but it has been received by entity after 31st March. Batao. Adjusting, non-adjusting. I think you have understood. It is now adjusting because now it is under the control of what? Entity. So it was under the control entity before 31st March. It can be endorsed to some other party. It can be deposited in the bank. Correct now. Therefore, it will be an adjusting event. Adjusting event. Adjusting event. Any doubt? No doubt na? Chalega? This also you have understood. One more question. Example number 11. This example, if you say correct answer, means my job done. My job done. Then this chapter is completed from adjusting and non-adjusting point of view. 31st March, date of approval. Before 31st March, they decided to close down one factory, means restructuring. Before 31st March, detailed plan was made. Correct. After 31st March, they have done public announcement. Understood? Public announcement they have made after 31st March. So whether on 31st March they will create provision for restructuring, means if adjusting then recognize provision. If non-adjusting, do not recognize provision on 31st March. Batao. Adjusting, non-adjusting. Adjusting, non-adjusting. Pakka. But public announcement was made before approval of financial statement. Still, the condition was not satisfied on 31st March. The condition arises after 31st March. Means 100% correct. This is example number 11 is final level question. Means in final level, you should expect this type of questions. Correct? Understood? So, public announcement made. Therefore, non-adjusting. I am happy that everyone is giving correct answer. And those who are not giving answer, they are able to understand. Am I right or not? Non-adjusting event because the condition arises after 31st March. Those who are not able to miss, I'm observing that many of you are not responding. Therefore, I'm saying you are able to understand now. Correct? Okay. Have you understood this point? Have you understood this point? If you want to write down the condition, both the condition, yeah, the second condition is satisfied after 31st March. Therefore, condition arises after 31st March. There was a constructive obligation after 31st March. Okay? Chalega. Done. One more question I would like to ask you. This is a practical question. This type of question they will not ask in exam. But normally you'll find this type of situation practically. When you go to audit, this type of situation will come. You written this? Last example from my point of view. Suppose on 31st March, there was one creditor and a check was issued. Check issued on or before 31st March. On or before 31st March. So what journal entry you'll do? What journal entry you'll do? Creditor account debit to bank. Suppose 20 lakh rupees. 20 lakh rupees. A check was issued. But before approval of financial statement, check was dishonored. Check was dishonored. Without adjusting, non-adjusting. Before approval of financial statement, check was dishonored. Adjusting, non-adjusting. Means if you are saying adjusting, you are saying reverse the entry. If you are saying non-adjusting, do not do anything on 31st March. Means then journal entry of dishonor will be done after 31st March. Means journal entry will be done. If you are saying adjusting, then dishonor entry you will do on 31st March. If you are saying non-adjusting, it means dishonor entry will be done after 31st March. Dishonor entry will do. But at which point of time will do that we need to understand. So adjusting, non-adjusting. How many are saying non-adjusting? How many are saying adjusting? Those who are saying adjusting, can you explain that? Explain why adjusting. Means in exam you can't write adjusting. If it is an MCQ question, you got 2 marks. Adjusting is correct. Adjusting is correct. Bolo, why? I have given some confidence that adjusting is correct. Now you can explain na. Adjusting event is correct. Why? का लग गया means. अरे बोलो. Then तो तुक्का. चलो, I will say. Just try to understand. When you have issued check of 20 lakh, it means can I say you should maintain minimum balance of 20 lakh in your bank account. And if you are not maintaining, it means this is your fault. And can I, the information of this will be available to management on 31st March only. We should maintain 20 lakh balance, minimum 20 lakh balance in our bank account. And if you are not maintaining, it means it is your mistake now. Then so what will happen? Every time whenever there is a liability, we will issue check and then it will be dishonor. You will try to reduce liability on 31st March. Means suppose we are preparing our financial statement. So in financial statement we'll try to disclose more liability or less liability. From our point of view, means entity's point of view, they will try to disclose what less liability. that will improve the financial position of what? Any entity. So can you see then, so this activity will be done by everyone. They will issue check and then they will reverse after what, 31st March? But no. Can you say the information of the balance that it should be maintained, but the bank account should be maintained with a minimum balance of 20 lakh was available on what? 31st March. Are you getting? That was the condition was there. And if you are not maintaining, it does not mean that the zona entry will be done on that day. You need to adjust it and you need to reverse the what? Zona entry. Correct? And therefore it become an adjusting event. Got this point? So what will be the adjustment? Reverse the entry. Even if, write down, even if information was not available with management, even though this information was not available with management, then also it become an adjusting event. Because in any case they need to maintain a balance of what? 20 lakh. Got this point? Correct. Have you understood? But suppose check issued and it was not deposited by the supplier or creditor in 3 months, then check will become what? It will become, what is the word? Check will be what? Still. It will become what? Still. Means now the check will be what? Automatically it will be no, it will be of no worth as per RBI guidelines. In that case it will be adjusting or non-adjusting. Then in that case it is non-adjusting because it is not a fault of management. They will reissue new check, but the journal entry will not be reversed. The journal entry will not be reversed. If you want to write on that, but this type of question they will never ask in exam. But these are all practical scenario example. Understood? Have you understood? Chalo. Now my job done. Now let us come to, there are 3 special points from this chapter point of view. Let us do that 3 special points. First special point is about long-term borrowing. This was not in AS4. So this is totally a new point for you. Try to understand the example. Now, before 31st March, entity has taken a long-term loan from bank of rupees 20 lakh. Of rupees 20 lakh. Understood? And there was one condition that if there is any breach of contract, means suppose the entity is not able to fulfill any condition given by the bank, there may be many terms and conditions that you need to deposit some documents, you need to deposit what, the quarterly report, etc. Or there may be some other condition. Got this point? So if they are not able to fulfill that condition, if there is some breach of contract, then the loan will become repayable on demand. Understood? So what was the condition? If any breach of contract, loan will become repayable on demand. Repayable on demand. When I say loan become repayable on demand, what does it mean? Whenever bank will demand, they need to repay. And therefore, as per Ind AS 1, when we'll do Ind AS 1, we'll do the definition of current asset and current liability. I hope you have done in CA Inter also. but I know you have forgotten. So as per Ind AS 1 definition, any loan repayment demand is a current liability. Means can I say if the breach happened before 31st March, then it will be non-current or current? Correct. So let us assume that breach occurred. The breach happened. Understood? Before what? It means now loan will become repayable on demand. Understood? And therefore will be classified as what? Current liability. It means on 31st March in the draft financial statement, even though originally it was long term borrowing, but now it will be shown as what? Current liability in the draft financial statement. Now what happened? Before approval of financial statement, bank agreed. Means there was some negotiation with the bank. Correct. And bank agreed. Bank agreed not to demand. Not to demand. Understood? Before approval of financial statement, bank agreed that will not demand. Now the question is that in the on this 31st March, means in this financial statement, it will be shown as current liability or non-current liability. If you are saying current liability, it means non-adjusting event. If you are saying non-current liability, it means adjusting event. Understood? But the current or non-current? Non-current means you are saying adjusting now. Adjusting, how many you are saying adjusting event? And how many you are saying non-adjusting event? Adjusting how many? Non-adjusting? So both the answer came. Both the answer came. Again, this type of question might be dangerous if you have not revised. This type of question might be dangerous. Correct. However, from international accounting standard point of view, the answer is what? Non-adjusting. Means as per IAS 10, when I write I means what? As per IAS 10, the answer is what? Non-adjusting. So those who have said non-adjusting, there are international students. But as per Ind AS 10, it is what? As per Ind AS 10, it is adjusting. So in your exam, you will give answer as per what? Ind AS 10. Therefore, correct answer is what? Ind AS 10. And this become your first carve out. Remember carve out? I say there are some difference which are known as carve out and carve in. So this become your first carve out. So I will teach you carve out also. And it will not take much time because I need to inform you what Ind AS says. And if I just inform you what is international accounting standard, yeah, IFRS is saying, so carve out done. However, in exam, if the question is silent, always answer as per what? Ind AS 10 and don't give any reference of international accounting standard. Don't become more smart ki as per international accounting standard. Don't write. And they will never ask. But suppose they ask, you should know this point. Chalega. Understood? So your answer is what? Adjusting event. Why? Now, of course, you can ask me, so why the difference? Why internationally it is non-adjusting? Why when we have conversed IAS 10 into Ind AS 10, why the difference arises? Why Ministry of Corporate Affairs has done this? Means in consultation with ICI only, in consultation with Accounting Standard Board of ICI. Chalega. Just try to understand what was the reason given. The reason given was that internationally bank is very much strict. It is super strict. Correct? And there is very rare chances that this will happen. Very rare chances. They are very strict. The banking regulation is very strict, and there is a very rare chances that this will happen. This condition was not there. Correct now. It is very rare chances, and therefore they said it is a non-adjusting. Means as per their economic condition, it is a non-adjusting event. In India, India, we all know that what can happen. Means thoda sa negotiation, it is possible. Means everyone knows that yes, it is possible. We can convince the bank that please don't demand. Even though there may be some major breach of contract, we can convince the bank. We can convince the bank. So if bank agreed, so can you say that that condition was available, because in India the bank is not so much strict, and therefore India's stance says that yes, if the bank has already agreed and that information is available before approval of financial statement, so can I say we should disclose what is the current position, and current position become non-current liability. So better to show what? Non-current liability only. I hope you are understanding. Correct? So because of that reason, Ind AS 10 says that it is an adjusting event. Correct? And kahin na kahin you will also think in that way. See, before approval of financial statement, bank agreed that they will not demand. Better to inform what? Non-current liability only. Non-current liability, and therefore adjusting means now it will become non-current liability. Non-current liability. Understood? Have you understood? Super important question have been asked in the last exam as MCQ, multiple choice question. Same question was asked as, I think this question was only asked, how much I remember, but I think it was asked. Okay, na? There are so many exams and sometimes we also confuse when the question was asked. Okay, chalega? Yes, now let us read. What a special case. Long-term loan, non-current liability, that is super important. Whenever there is a breach of material provision, oh, material. What they have written? Whenever there is a breach of material provision, it means can I say this para is not applicable for breach of immaterial provision. Means if there is a minor defect, then this para is not applicable. If there is a minor default, then this para is not applicable. Material provision means major default. Major default. In case of long-term borrowing, on or before reporting date, with the effect that such loan become payable on demand. So it become payable on demand before what? On or before 31st March. Means breach happen on or before 31st March. Such loan shall be classified as non-current liability if the lender, means bank, agree not to demand payment before approval of financial statement. Correct? Understood? So more clarification. If the breach of contract happened on or before reporting date and it is a minor default, then this para is not applicable. Well, a minor default, so it will remain non-current liability only. Minor default means was submission of some document, PAN card, etc. That is a minor default. Correct now. So for that, it will not become repayable on demand. Means it will be a non-current liability only on 31st March. Correct. Then it will be a non-current liability. So how can we understand it is a minor or major default in exam? If the question is silent, always assume what major default. By your own, don't assume it is minor default. So of course in exam they will give some indication about minor default. I will say they will never ask a question about minor default. But suppose they ask, so they will inform you that this is minor default, because we can't understand by our own what is minor and what is major. Understood what I am saying? Yes, sir. If it is major default, and if the lender agree not to demand before approval of financial statement, non-current liability, it means adjusting event. And other cases means if the bank has not agreed, then it will be what? Current liability. It will be current liability. Understood? Correct. In the last question, means last exam, I think last exam only they have asked. They said ki negotiation was done on what? 30 in this period. How they have changed the answer and how the students were confused. They will try to confuse you. They will try to confuse you. Means those who have done the concept but have not proper understanding. They have done only one question but they have no proper understanding. They might do mistake. And in MCQs, higher chance of mistake, because what happened when we read the question and when we come to MCQs, we forgot what was given the question. Because in one case study there will be a lot of para na. So just try in exam hall a small para can be difficult because options are given. With options you'll be confused. With options you'll be confused. So what they have done, negotiation was done after 31st March with the bank, but bank agreed after the approval of financial statement. Bank agreed not to demand, but after approval of financial statement. Understood? What happened? Whether it will be current or non-current? It will be current or non-current? Current only. The bank agreed, but bank agreed after approval of financial statement. I will say this is not a question of Ind AS 10 only. Whatever has been done after approval of financial statement, it is not covered in this chapter. Then it will remain current only. And the student confused with the word that negotiation happened what? Before approval of financial statement means after reporting date, and they have not read the question carefully. Question came non-current liability. They have put non-current liability. Understood? Chalega? Yes, sir. So they, of course, they can change, but if you have understood, you can answer any question. Okay. Have you understood? Then one carve out I have given as per IAS 10, even after reporting date period, rectification of any breach after the end of reporting period is a non-adjusting event. Rectification of any means what? Any, whether material or immaterial. Means internationally they have not said minor or major default. For any breach, they say it is what? Non-adjusting event. Okay? This is carve out. This is carve out. Batao. 1 minute. Let me draw. What you are saying? This is breach happen after 31st March. Then to it is what? Non-current liability only na. Same question we have in one Ind AS 1 also. Correct? Breach happen what? After 31st March. So on 31st March it is current liability only. No, no. Breach happen after 31st March. Condition arises after 31st March or on 31st March. After. So it relate to the condition arising after 31st March. It is a non-adjusting. Is a non-adjusting event. Breach happen on or before 31st March. There is a condition. Then now it become current liability. It become repayable on demand. It become repayable on demand. Understood? Chalega? I think you have understood. I am not writing that example. Then second special case is about going concern. This you have already done where? C enter. What they say? Suppose this is 31st March and this is what date of approval and fire occurred. Use losses. Use losses. Correct? But the adjusting, non-adjusting. No. How adjusting? No, that I have not said now. 1 second. Look. Whether I have said going concern affected. Just try to understand emotions of the question. Sometimes whatever we become what? Bhavuk. We become emotional. Whether I have said going concern is affected. I have said use losses. I have said only use losses. Nah. Loss happened does not mean we will liquidate. It might be insured. Or we have lot of funds. Correct now? Got this point. So you need to understand what is the requirement of the question. You need to ask me like this, sir, whether going concern is affected or not affected. It means there can be two situations. GC means what? Going concern is valid. Valid means not affected. Or GC is now invalid. Invalid means affected. So of course if it is valid, then adjusting or non-adjusting? Non-adjusting. Correct. But if GC is invalid, then it become what? Adjusting. Even though there was no condition. Even though there was no condition on 31st March. Correct. Why? Why so? Means if GC is invalid, but there was no condition of fire or loss on 31st March, then also why AS4 used to say it is an adjusting event? That is the what we will do adjustment. My question is that why it become an adjusting event? There was no condition now. Just try to understand. Suppose they have earned a profit of 1000 crore in this year. Correct? Understood. But due to event, they know that they are going to be liquidated. So now, whether we can inform to the user that we are a good company. So can you see, if you have understood that we are a non-going concern before approval of financial statement, so what Ind AS 10 or AS4 want to say that you should inform this point to whom? To the user of financial statement so that they can take reliable decision. So that information should be given, and therefore entire financial statement should be now prepared on non-going concern basis. On non-going concern basis. Means, can I say, normally we prepare our financial statement on which basis? Going concern basis. When I am saying when financial statement are prepared based on going concern basis, means we are applying all Ind AS. Means we are applying all Ind AS. Ind AS is for going concern basis only. From Ind AS 1 to whatever Ind AS we are doing. Correct. But when we are saying financial statement are prepared on non-going concern basis, for that we do not have any Ind AS. So how to prepare that financial statement, that we need to understand. Correct now. So what our generally acceptable accounting practice is that we need to prepare our financial statement on liquidation basis. Suppose we are going to liquidate, how much amount is going to be realized. In that case, entire asset and liability should be recognized or recorded at realizable value. At realizable value. Now, how to prepare financial statement on non-going concern basis? That is not given in Ind AS 10. Ind AS 10 says that a fundamental change in the basis of accounting should be made. Whenever going concern become invalid, we should make a fundamental change in the basis of accounting. Understood? Means our way of preparation should change. Basis of preparation should change. Basis of preparation should change. But how to prepare, that is not given under Ind AS 10. How to prepare that financial statement, that is not given under. Are you able to understand what I am saying? Yes, sir. Correct. So GC become invalid. You have understood. So it become what? Adjusting. Now it become adjusting. This word is not given under Ind AS 10. AS4 used to say that financial statement require adjustment. But Ind AS 10 says that the basis of preparation, the fundamental basis of preparation of financial statements should change. So they have not used the word adjusting. I will read that para. Don't worry. From examination point of view, you can write down adjusting. They will give you the marks because they will understand your emotions. But then also that keyword is very important. What is the keyword? The fundamental basis for the preparation of accounting should change. That become the keyword. Have you understood the entire thing? Suppose the question is silent, whether the going concern is appropriate or not appropriate, then give both answer. Don't give only one answer because the question is silent. So to be a safer side, you should write down if this is the case, the answer. If this is the case, this is the answer. Chalega? Okay? Yes, sir. So what is given? An entity shall not prepare financial statement as per going concern. Entities should not prepare financial statement as per going concern. This we can say in this way: entities should prepare financial statement as per non-going concern. Correct? If it intend to liquidate, if it intend to liquidate, there is an intention to liquidate, or there is an intention to cease trading, or they have no realistic alternative but to liquidate. Means they have no other option, but they have only one option to liquidate. Means there is no intention to liquidate, but they do not have any other option. They have only one option to liquidate. For example, government has put some restriction on liquor industry. Liquor, in Bihar it happens, in Gujarat it happens. Huh? Gujarat happened way long back. Correct ना? अरे छोड़ना रे. मतलब liquor, you want restriction, you don't want restriction. Chodo. That discussion is not valid right now. But just try to understand, put restriction on what? Liquor industry. So automatically can I say now they cannot run that industry. So they do not have an option but to liquidate. So it means now that industry or that entity become what? Non-going concern. If the going concern assumption is not appropriate, correct, that it become invalid after reporting date, Ind AS 10 require fundamental change in the basis of accounting. See what you understood? Fundamental change in the basis of accounting. They have not used the term adjusting. Rather than adjustment to financial statement, means they have not used this term adjustment to the financial statement. AS4 used to say adjust the financial statement, but they are saying fundamental changes in the basis of accounting. So what is this fundamental changes in the basis of accounting? Is now add on financial statement, yeah, like assets and liability will be recognized at realizable value. Assets and liabilities will be recognized at realizable value. Just write down, refer chapter number 1, conceptual framework. When I will take chapter number 1, now I will take one question ki how to prepare financial statement on non-going concern basis. So in that chapter I will take one question. So you will be able to understand how to record assets and liability on realizable value and how to prepare statement of profit and loss. In that case, we'll take one question only for your understanding. Only for your understanding. But Ind AS 10 is silent about what should be the basis of preparation. They said we should make a fundamental change, but what should be the basis of preparation, that is not given under Ind AS 10. So don't write down ki as per Ind AS 10 we will record at realizable value. That is wrong. They have used only what word? Fundamental changes in the basis of accounting. Then you can write on an expert opinion. It means that assets and liabilities should be recorded at realizable value. But this para is not given under Ind AS 10. Chalega? Understood? Yes, sir. Now, this para is given under Ind AS 10. Now, what Ind AS 1 says that whenever you are preparing financial statement on non-going concern basis, the following disclosures are required. Ind AS 1 says if financial statement are not prepared on going concern basis, you should give the fact. Fact means that you are preparing the financial statement on non-going concern basis. That should be disclosed. Second, basis of preparing financial statement. At what basis you are preparing financial statement, that is given as per Ind AS 1 says that you should disclose that basis, whatever basis you are using. Then reason why entity is not regarded as going concern, what actually happened that now you are not a going concern, you need to give the reason. This disclosure are required as per Ind AS 1 ki Ind AS 10? Ind AS 1. So you can improve your answer by writing that as per Ind AS 1 we should give the following disclosure. Chalega? Understood. Means what we have understood, that any event after reporting date, if going concern remain valid, non-adjusting event, only for your understanding I have written non-adjusting event. Correct? If it is valid, disclosure is required if the amount is material. Then only disclosure required. If going concern is not valid, adjusting event, however, you should write down fundamental changes in the basis of account is required. Disclosure required as per Ind AS 1. As per Ind AS 1. This disclosure is as per Ind AS 10. Huh? This is as per Ind AS 10. Chalega. Right. Last point. Special point. Proposed dividend. You all know about proposed dividend. Same point was given in AS4 whether we'll pass any journal entry for proposed dividend. Proposed dividend means what? Dividend proposed by whom? Board of directors before approval of financial statement. For which year? For the current year means what? For the current year means what? For the reporting period, na? Means if this is the date of approval, they are declaring, they are proposing some dividend for this year, na? This is current year, na? This is current year. Okay. But here it seems that you are saying this is current year. Okay. Means for the reporting period. So can you see, even though it was proposed, now one question arises, the proposed dividend, one doubt may arise, you client may say, why you are doing We know the information before what? Approval of financial statement, and that proposed dividend belong to this reporting period. So it is a liability. We should pass the journal entry, and we should recognize proposed dividend on 31st March as we do for salary, as we do for any other expense. Are you able to understand? We do salary outstanding na, even though paid after what? 31st March, and we always follow accrual system. We always follow accrual system. Your client may say your answer is correct 1 second because AS4 you have done that. It is a non-adjusting event. But why? Hmm? 1 second. It is payable. We understood. I am also saying it is payable after 31st March only. It is payable after 31st March. So payable now. So salary payable. You pass journal entry or not? It is dividend payable. What is wrong in this? Not able to. You are saying it is payable after 31st March. So I am also saying it is payable after 31st March only. Will not pay on 31st March. So salary is payable after 31st March. Sorry. Salary is payable after 31st March. We record it now. I am your client. I am trying to give my justification. You need to convince me na. बोलना रे. You need to convince me. So convince fast. At which point of time? Proposal or approval? Correct. Can you say when it was proposed, there is no obligation? If there is no obligation, it is not a liability. If it is not a liability, the question of recognition of liability will not arise. So can you say it will become liability only once approved by the shareholders in AGM? That time we should recognize the liability, not at this point of time. Therefore, our AS4 and Ind AS say the proposal has no obligation and therefore question of liability will not arise. Correct? Understood this point? If an entity declare dividend to the holder of equity instrument, holder of equity instrument, now holder of equity instrument, a new term in your life. Till now, I think you have done only equity shares. Have you heard about equity instrument till now? No. The equity instrument is a wider term. Equity share is an example of what? Equity instrument. What is equity instrument? Detailed discussion will do under Ind AS 32. Coming soon. Coming soon. Refer Ind AS 32. Means I'll just like to give one more example of equity instrument for your understanding. But don't ask explanation right now. Any irredeemable preference share capital. Any irredeemable preference share capital. There is no obligation to pay any amount. So that is also equity instrument. So whenever you receive some amount, but there is no obligation to repay, it becomes equity. Means it is an equity instrument. So redeemable preference share capital is a liability. But irredeemable preference share capital become equity instrument. Correct? Detailed discussion where? Ind AS 32. Means when I am saying equity instrument, it will also include what? Irredeemable preference share capital or any other equity instrument. Right now, we can consider in our mind key equity shares because you can understand from that example. So if an entity declare dividend to the holder of equity instrument after reporting date, the entity shall not recognize it as a liability at the end of reporting period. However, such dividends should be disclosed as per the requirement of Ind AS 1. Ind AS 1 says that any dividend which is proposed required disclose. So we should disclose as per the requirement of Ind AS 1. As per the requirement of Ind AS 1, not as per the requirement of Ind AS 10. Ind AS 10 says what? Do not recognize. It is a non-adjusting event. Now, when I am saying such dividend are disclosed in notes to account, my question is that whether this proposed dividend, whatever you are disclosing, it will disclose under contingent liability or it will be disclosed somewhere else. Means whether it is a contingent liability, whether that proposed dividend become a contingent liability. Bolo yes or no? Bolo. 1 second, means you have not understood the chapter in Ind AS studies. When I am saying no obligation, what do you mean by contingent liability? Is a present obligation or possible obligation. So it is not a contingent liability also. It is not a contingent liability. Please apply definition. I am saying don't apply whatever you have done in your previous classes. Correct? Now already we have done everything. Only you to apply definition. If you are able to apply definition, you become CA. You become CA. So we are doing definition in a what? In a very, we are doing in detailed discussion. We are doing for definition only. I am taking a lot of time in definition only because I know the importance of definition as a chartered accountant. चलेगा? So it is not a contingent liability. Correct? So write down this now. Proposed dividend is not a contingent liability. Write down. This type of question they will never ask in exam. They will never ask in exam. Ha, now with MCQs, higher chances. Have you understood this point? So it is not a contingent liability. Okay, sir. Correct. Have you understood? Means, to a better understanding, if I say about preference share capital, if I will say about preference share capital, so can I say it can be classified, means it may be irredeemable. Or it may be what? Redeemable. Irredeemable means it is an equity. Redeemable means what? It is a financial liability. I'm writing liability. So right now you don't know the term financial liability. Liability. Correct? Understood. This much you have understood. Any doubt in this? So this para, whatever we have done right now, it is applicable for what? Equity. Means can I say any preference dividend which is not declared cannot be recognized as liability in the balance sheet. Correct. The preference dividend which is not declared cannot be recognized as liability in balance sheet. Understood? Have you understood? Correct. This much you understood. But what about redeemable preference share capital? Whatever para we have done right now, whether it is applicable to this? No. It is a liability. Liability means as simple as debenture. Debenture and this instrument is same or not? So will you recognize the liability even though not declared on accrual basis? On accrual basis. So here, just try to understand. Just write. Don't write by your own. Whatever I'm writing, that you write on. It will be measured at amortized cost as per Ind AS 109 and dividend expense will be recognized dividend expense will be recognized in PL by applying effective interest method. Just write down and forget. Leave it right now. This will help you when you are doing revision. Right now you don't know. But when you are doing revision, that time, so you know Ind AS 109, so you will be able to link. I'm just creating that linkage. Are you getting? So when you will come to this point, then go to Ind AS 109, just check what was the amortized cost and you will be able to understand whatever is written right now. But right now I will not explain this point. But one thing you have understood, that whatever para we have done right now, that is not applicable to what? Redeemable preference share capital, which has been classified as liability. That too you have understood? Correct. Now, one more point, only for your better understanding. Suppose this was reporting date, this was board of directors meeting, and this was AGM. So on this date, dividend was proposed, and on this date, it was approved. Dividend was approved. Proposed dividend. Means once it become approved, now we call it final dividend. Means it become now final. Final means now we are supposed to pay. It become final. So we call it final dividend. I hope you know this term, final dividend. I'm not discussing about interim dividend right now. This is final dividend. Final dividend means which is declared after balance sheet date for the previous year. For this year. Now my question to you all, on reporting date, what journal entry? No journal entry. On the date of proposal, what journal entry? No journal entry. On the date when it become approved, what journal entry? Bolo. Journal entry bolo baba. I'm not here to teach you journal entry, huh? Is shareholders account debit? Is equity shareholders account debit? Yeah. Means some amount is receivable from equity shareholders. कुछ भी बोलते हो मतलब. बोल. हाँ चलो कहीं से बना कुछ तो. So it is retained earning. Retained earning. Writing here. Retained earning. Retained earning is nothing but PL appropriation account. Bachpan mein used to call it what? PL appropriation account. But now you become matured. So now we'll call it what? Retained earning. Now PL appropriation account was bakwas naam. The correct name is retained earning. Correct? It is nothing but revenue reserve. It is nothing but revenue reserve. Okay? So now always we write down retained earning account debit to dividend payable. And can I say, as per Companies Act, within 30 days it need to be paid. Once declared within 30 days, na? 30 days. Abhi bhi 30 hai na? Correct. It is what? Then when it is paid, what journal entry? Dividend payable account debit to bank. Understood this journal entry? Correct. Means can I say in this way? The final dividend is the dividend of previous year, but then also it will be accounted in the year when it is declared. It will be accounted in the year in which it is declared and paid. And paid. Correct. But there is one doubt. When I was a student, then this was a doubt in my mind. Means I was always confused. The dividend is also a payment. So why dividend is not charged to PL account? Means as simple as interest. Interest is also payment. उतना तो मुझे ही पता, it is not a charge. Means it is not a charge, it is an appropriation. That to every teacher says. वही तो doubt है, why it is not a charge? तो कुछ भी बोलते हो. I am asking that doubt only. Your teacher says it is not a charge against profit. So that is only question why. Let me come. Simple. It is a payment or not? Payment. You have taken some funds from shareholders. As simple as you have taken some funds from debenture holders. Correct now. And we know that equity shareholders and entity are different, separate entity concept. When you are doing accounting for entity, so you are doing accounting for entity, not for shareholders. The shareholder is also outsider party. You are paying some, you are paying some payment, you are paying something to the equity shareholders. So why it is not debited to PL? As simple as interest is paid to debenture holders, the dividend is paid to what? Shareholders. So why it is not an expense? Means whatever debited to PL is an expense. And if it is not debited to PL, it is not an expense. So why? This was a doubt in my mind. Of course, it was solved at some point of time, and not by any faculty. I have only understood by reading something. Means I have asked this question to my teachers, but when I was in class 11, 12 that time, nobody has given me the answer. They say it is a charge. Maja aa raha karo. Only this was the answer given. Batao, you say. And distribution of profit, interest is also distribution of profit to whom? Debenture holders. Whatever profit you are earning, that is distributed to debenture holders or not. You also employee you are giving salary from where? Profit only. Profit only na. So all are distribution only. Chalo, theek hai, that word is used for this distribution. So that is, I will say, okay, we understood this is for distribution of profit. But my question is that why it is not debited to PL? The answer is given in the definition of expense. Everything is with the definition. If you know the meaning of expense, there is the answer. Means nobody has given the answer with definition. Means they should define expense. Have you done the meaning of expense anytime? Have you done the meaning of income anytime? Have you done the meaning of asset anytime? Have you done the meaning of liability anytime? Have you done the meaning of equity anytime? No. Means most of the time the emphasis was not given on that. They said asset, these are the example, maja aa raha. But can you see, they should define properly asset, liability, income and expense. These are the five. With equity, these are five elements of financial statement. And can you see, if we don't know the proper definition of these five elements, how can we prepare our financial statement as a chartered account thing, not as a student? So what is the meaning of expense? छोड़ दो, छोड़ दो. Whatever is the meaning of expense, I am writing. Expense means what? Decrease in asset or increase in liability. So we know this, but you need to inform now. But this is not a complete definition. Decrease in asset or increase in liability with the corresponding increase or decrease in equity. Equity will increase or decrease with a corresponding decrease in equity. Correct. If this is the only definition, apply dividend. Dividend means what? Dividend means you are paying something, so that is decrease in what? Asset, and your equity will decrease. Equity decreases now. Then it also become expense. But this is not complete definition. It is not the complete definition. Then they have done. Other than distribution of dividend to equity participants. This is the definition given. Understood? Means because of this definition, we need to apply definition. Dividend is not an expense. Dividend is not an expense. Apart from this, any decrease or any increase, any decrease in asset or increase in liability which have a corresponding effect of decrease in equity is what? But they have given one exception in the definition. Any distribution or dividend to equity participant is not an expense. Is not an expense. So this is given definition. This is given in the definition. To somebody, if somebody in interview asking you why dividend is not a expense, you should prove them by this definition only. And if you are not able to give the definition, means they will say this is rectification. That to everyone know dividend will be transferred to what? Retained earning. But this is the reason. Reason you have understood? Reason. Income definition is just opposite. Can you say now the income definition? Income is what? Increase in asset or decrease in liability with a corresponding increase in equity other than any contribution from equity participant. Any contribution from equity participant is not an income. And therefore equity share capital is equity share capital that is not transferred to income. That is not transferred to income. Have you understood? So journal entry you have understood why it has been debited to retain earning. Why it has been debited to retain. Chalega. Okay, sir. This also you have understood. Now, disclosure requirement means I have given some time to this because of future classes. On the understanding that in future classes I will come back to this point. When I will teach you Ind AS 109, then I'll come to again this point. Don't be confused at that point of time. I have given everything. Disclosure requirement is very simple. What are the disclosure requirement? Date of approval of financial statement. You should mention the date of approval. Who has given approval? The name of the director who has given the approval. Entity owner or other who has the power to amend financial statement after issue. Understand? I have given an example. There may be some power given to the officer or owner to reopen the books of account. Correct? So if there is any owner or any other officer who has a power to amend the financial statement after issue, then also the name of that person need to be given. These disclosures were not in AS4. This AS4 was silent about this particular disclosure. Then updating disclosure about condition existing on reporting date for adjusting event. Updating disclosure means just try to understand one example. Suppose there was a contingent liability of rupees 10 lakh. Contingent liability means disclosure. Disclosure na. Because there was a possible obligation. Correct. But some information came before what? Date of approval. This 10 lakh should not be 10 lakh. This should be 15 lakh. Some information came. Whatever estimation you have done 10 lakh, there should be actually what? 15 lakh. But the adjusting, non-adjusting. One second. There was in the draft financial statement, there was a contingent liability as a disclosure of rupees 10 lakh. It was a disclosure. Then some information came before approval of financial statement that 10 lakh is not a correct estimate. The better estimation is what? 15 lakh. Quite possible. Some information came from outside expert, whatever. I'm not giving the entire case studies. Correct now. So now the information came that it is not 10 lakh, it is 15 lakh. Adjusting, non-adjusting. Adjusting event. Adjusting event means what? What do you will do? Yes. Adjusting event does not mean journal entry. If you are updating the disclosure, then also it is what? Adjusting event. This clarification I am giving. Understood? Sometimes students think that adjusting event means only journal entry. If you are doing adjustment in your disclosure, that is also what? That is also adjusting event. Have you understood the emotions? Correct now. So this is also adjusting event and adjust the disclosure part and do adjustment in the disclosure part. That is given only in point number B. Now you will be able to understand updating disclosure. Understood? Updating disclosure about condition existing on reporting date for adjusting event. Now I think that example you have understood. Example understood. Updating disclosure about the condition existing on reporting date for adjusting event. The example I have given. Then non-adjusting event if material following disclosures are required, nature of the event and estimate of financial effect. If the amount cannot be estimated, the facts should be disclosed. What is the difference between AS10 and Ind AS10 and AS4? First difference, non-adjusting event. As per AS4, disclosure was required in the report of approving authority. Bakwas point. That has been changed. Disclosure in report of approving authority. Now disclosure were in the financial statement. Going concern, theoretically difference, practically no difference. Theoretical difference means what they require adjustment, but they require fundamental changes in the basis of accounting. This is theoretical difference, but it become a difference. Then disclosure, of course, more disclosure, less disclosure. This point will be in every Ind AS. Ind AS require more disclosure. Chalega, done. Chapter over. Now, can you say for this chapter, my role is very less as per question is concerned. What I will do, I will read wastage of time. Better you read any doubt you ask me. In this chapter, and I have given sufficient example to for revision purpose. I have given sufficient example. Then also there are some favorite question of the institute. I'll just highlight that this type of question are favorite question 24. Normally they ask this type of question. They will give some 5 cases. They will say adjusting, non-adjusting. So this 24, 25 are the favorite question. Other question also are good only. You can read. Can I conclude that this chapter is completed from my point of view? Other all question you can read. Chapter is completed from my point. Okay. चलेगा. We'll take an early break today. After break, we'll start what? New Ind AS. Now, can we start once again, everyone? Okay. So before break, we completed Ind AS 10. But under Ind AS 10, there is one appendix. You can say appendix. Point number 8. I hope once I have said appendix, you have understood. It is nothing but interpretation. Interpretation you understood. I have said before 2001 it was SIC, Standard Interpretation Committee. After 2001 it became IFRIC. IFRIC means what? International Financial Reporting Standard Interpretation Committee. So they used to provide interpretation. That interpretation will now become what? Appendix to Ind AS. But when I say appendix to Ind AS, it is not Ind AS. So Ind AS 10 completed. Under Ind AS we have one appendix. Correct? That is Appendix A to Ind AS 10. Whenever questions come for this particular transaction or event, you can't write as per Ind AS 10. You write on as per what? Appendix A to Ind AS 10. So Ind AS 10 and Appendix A to Ind AS 10 are two different topics. Understood this point? But I need to teach after Ind AS 10 only. And therefore, let us understand. So the topic is what? Distribution of non-cash asset to the owner. Means when I say dividend, dividend is nothing but distribution of cash to the owner. So sometime entity may distribute non-cash asset to the owner. So what will be the accounting treatment for that? For that, Ind AS was silent, means IFRS was silent, and therefore there was some interpretation required. That interpretation now become appendix. Have you understood the topic? Distribution of non-cash asset to the owner. Now, when I say distribution of non-cash asset to the owner, distribution of non-cash asset to owner means case it is a transaction between entity and owner. Right now, owner, let us think about equity shares only. So I'm writing equity shareholders, but you have understood equity shareholders is only one example. There can be other owner also. Who are equity participants? Means the holder of equity instrument. The holder of equity instrument. Now, can you say what type of transaction there can be? Can you say this first transaction is what? Contribution from owner. When I say contribution from owner, this can be one transaction. Can you see it can be in cash, it can be non-cash? Yes or no? Contribution can be in cash or non-cash also? Yes or no? Non-cash. Means if I say if I purchase property, if I purchase property, plant and equipment and equity shares allotted, correct? It means contribution of what? We receive contribution in cash or non-cash? Cash or non-cash? बोलना रही है. You receive what? Non-cash na. So that is contribution in non-cash. So there can be such transaction. Understood? Then second is what? Distribution. Distribution to owner. So it can be also in cash or non-cash. It can be also cash or non-cash. Got this point? And third transaction may be any other transaction. Means entity can purchase some goods. Entity can purchase some goods from owner, but not in equity shares. There can be some other transaction also. So there can be some other transaction. Other transaction. It can be sale. It can be purchase. It can be loan given, whatever. Understood? You can see these two transactions are one way. One way transaction. Means contribution received. So nothing is payable now. Nothing is payable. So we call it non-reciprocal transactions. Non-reciprocal transaction. But this is two-way. Means if you purchase some goods, some amount might be payable. You may purchase goods, means entity may purchase goods from the equity shareholders, but the amount is payable. Correct now? So that is two-way. So this is called known as reciprocal transactions. So reciprocal transactions are covered in respective Ind AS. Right now we are not discussing this. Respective Ind AS. Understood? Now this contribution from owner in cash is covered under Ind AS 32. Coming soon in your life. And non-cash is mostly covered in Ind AS 102 coming soon in your life. Coming soon in your life. If you purchase property, plant and equipment and if you have issued equity shares, that transaction is covered under Ind AS 102. Or if you have received some services and equity shares are allotted, so that is also covered under Ind AS 102. Correct? So that will be covered. Distribution honor in cash means dividend. It is covered under Ind AS 32. And for this, actually Ind AS 32 was silent. Ind AS 32 was silent, is silent. And therefore doubt came. Understood? What happened? Doubt came. Whenever distribution is in non-cash, then what will be the accounting treatment and what value it should be recognized? And therefore what was required? Interpretation. And that become Appendix A to Ind AS 10. Of course, just try to understand from my point of view, it should not be a part of Ind AS 10 because Ind AS 10 does not deal with what? Dividend. It deals with what? Event occurring after balance sheet date. So from my point of view, it should not be added to Ind AS 10. But what they have done, because proposed dividend was a point here, but they have added here. From my point of view, it is actually topic of what Ind AS 32. But now, because they have already added, we will call it what? Appendix is covered where? Under Appendix A to Ind AS 10. Understood what I am saying? So the accounting treatment for this is given under Appendix A to Ind AS 10. Appendix A to Ind AS 10. Correct. So what I will do, I will take one situation. You need to apply your common sense. Can I see? Because you are also seeing, you can also interpret by your own. Let's see your interpretation and Appendix A to Ind AS 10 interpretation are same or not. If it is same, so we can conclude that whatever question ICA is asking exam, if you apply common sense, you can answer it. Yes or no? So I'll just take one case study. However, institute has not given any question from this topic, but they have asked some question in MCQs. Whatever is given in the ICA website. So this type of question now can be asked in multiple choice question. With multiple choice question, scope has been increased. Means the topic from which descriptive question was not asked, now from that topic, now MCQ question can be asked. Chalega? Understood? So I have taken one example. Example number 1. Entity proposed distribution of one pen to all shareholders on 15 Jan 2017. Entity proposed distribution of one pen. Entity declared and approved the dividend for and it declared and approved the dividend for distribution of one pen to all shareholders on 15 Feb. So it was proposed on 15 Jan, approved on 15 Feb. It was actually distributed on AGM which was held on 15 May means after reporting date. Distribution actually happen on 15 Feb. Means between approval and distribution there is one 31st March. Fair value of each pen on 15 Jan was 500. On 15 Feb it was 500. On 31st March it became 520. 15 May it became 515. The fair value of pen is given. Cost price of each pen means the pen will be purchased before distribution. The cost price of each pen was how much? 400. Now we'll assume that for understanding these are the inventory for this entity. So the pen is an inventory. It can be what other than inventory also. But let us assume this was the inventory for the entity. So they have already purchased, already manufactured, already manufactured. And the cost price how much? 400. Number of shareholders how much? 1000. And we'll assume that all shareholders will come where? In AGM. Nothing is given, we'll assume that only. If nothing is given, we'll assume that all shareholders will come and attend AGM. Chalega? Batao. You will say the journal entry. On 15 Jan, what journal entry? No journal entry. Understood? Simple. 15 Jan, no journal entry. Now on 15 Feb, when it declared approved, what journal entry? Retained earning account debit to dividend payable. Same journal entry. The retained earning account debit to dividend payable. At what amount? Means amount will take cost price or fair value. We should take cost price or fair value. Fair value. So you are saying fair value and 100% correct. Fair value is only correct. Means can I say you can interpret by your own, because we are also CA. We can interpret whatever they have done interpretation. Chalega 100% correct. You can see on 15 Jan to no journal entry. On 15 Feb retained earning account debit dividend payable. It is 1000 into 1 into 500 was the fair value. Correct? So 5 lakh. No doubt. Then on 31st March, the fair value of the pen become 520. This is assumption I have taken to inform you all the points. Let us assume pen is of gold. Some gold is also attached. So the fair value might increase now. The price of gold will increase. The fair value will increase. So to explain all the point I have taken one assumption that fair value of pen will increase. Normally fair value of pen will not increase. Got this point? But to explain all the point, on 31st March, it is quite possible the fair value of non-cash asset might increase before distribution. So now from 500 it become 520. Any adjustment required? Yes sir. So what journal entry will do? Retain earning account debit dividend payable with increase. Your liability will increase. So it become what? 1000 into 20. That is how much? 20,000. So that same journal entry. Retain earning account debit dividend payable 20,000. Simple. Simple. Then what happened? On the date of distribution, the fair value become 515. On the date of actual distribution, now the fair value become 515. Without what journal entry? Any adjustment required? 1 second. Yes. Now dividend payable will decrease to what journal entry? Dividend payable account debit to retained earning by what amount? 5,000. So you can see I have done that journal entry. Dividend payable account debit retained earning 5,000. It means now liability become how much? 5 lakh 15,000. Now the dividend payable become 5 lakh 15,000. Now on the date of actual distribution, what journal entry will do? Now we'll do distribution. What journal entry batao? Dividend payable account debit to inventory. Dividend payable account debit to non-cash asset. Correct. That only check karo. Dividend payable 5 lakh 15,000 to inventory 4 lakh. Correct. And any difference, one doubt will come. This difference will be transferred to PL account or retained earning. When you are saying transfer to PL, it means it become income and expense. When you transfer to retained earning, it means it is not an income and expense. Understood? So, are you getting? So, when you are saying PL, PL means SOPL. SOPL means income and expense. When you are saying retained earning, means it is not an income and expense. So, when you are done this entry, retained earning account debit, so dividend is not an expense. And therefore, we have debited our retained earning. Are you able to understand? So you need to understand that this difference will be transferred to PL or retained earning, because it is written. Understood now? Because it is written, because of that reason you are saying, or you have understood. Now just try to understand. Dividend payable was 5,15,000 and now the value means the cost price was 4 lakh. So it means it is an increase in what? Asset. Increase in asset. Increase in asset. And any increase in asset will be transferred to what? PL account. One second. Increase, this is what? 4 lakh you have purchased. The value is what? 5,15,000. Increase in asset na? Inventory you purchase at what price? 4 lakh. Now the value is what? 5,15,000. It means this become gain on distribution of asset. This become gain on distribution and that will be transferred to what? Profit and loss account. So this become gain and the gain will be transferred to profit and loss account. Have you understood? Correct? Have you understood? So this clarification has been given. This difference will be always transferred to PL account. Don't transfer return earning account. This will be wrong. That will be wrong. So it will be transferred to what? PL account. To any difference. It can be debit. It can be credit. The difference can be debit or credit. Debit means loss. Credit means gain. Understood? चलेगा? Easy. Very simple now. Very simple. चलेगा. Now let us read the topic. What they have given. Non-applicability of Appendix A to Ind AS 10. Means this is not applicable to what? It is not applicable in the books of shareholders. Appendix A is only applicable in the books of entity who is distributing what non-cash asset. Correct? It is not applicable for accounting in the books of shareholders who receive such distribution. First point, have you understood? So this Appendix A is applicable in the books of entity who is distributing what non-cash asset. It is also not applicable to distribution of non-cash asset to the entity which is ultimately controlled by same party before and after distribution. It is not applicable to any entity. Correct now. It is not applicable to distribution of non-cash asset entity which is ultimately controlled by same party before and after distribution. Have you understood? No, na. So of course no. Therefore, this para will discuss under Ind AS 103. Right now, I can't explain. Control, everything will discuss where? Ind AS 103. They have already have given refer what Ind AS 103. Refer Ind AS 103. So I will only come back to this point. Don't worry. I will only come back. You are not supposed to remind me. Okay. So automatically this para will be covered under Ind AS 103. You can add on question mark. Right now the question mark is there. Applicability, it applies to the following type of non-reciprocal transaction. Understood? Non-reciprocal transaction. This can be a part of MCQs. They will say Appendix A to Ind AS 10 is applicable to reciprocal transaction, non-reciprocal transaction. They will give two more options. It is applicable to what? Non-reciprocal transaction between entity and owner. First is distribution of non-cash asset. Second is distribution that gives owner an option of non-cash asset or cash. Option means an option has been given whether you want pen or you want cash. If that option is there, then also Appendix A to Ind AS 10 is applicable. But if the dividend is in cash, then Appendix A to Ind AS 10 is not applicable. Then Ind AS 32 is there. Are you getting what I am saying? Then Appendix A to Ind AS 10 is not applicable. So only in these 2 points, Appendix A to Ind AS 10 is applicable. You know, in MCQ, whatever question they have given, the question was related to this point. I mean, right now I'll frame that question. You can always give the answer. Correct. But you can understand with MCQ, the scope has increased. The scope has increased. They can ask question from any point. Chalega. Accounting treatment now, of course, you have understood. On the date of proposal, no entry. On the date of declaration and approval, retained earning account debit to dividend payable with the fair value of non-cash asset. On reporting date, any changes in the fair value asset should be adjusted. That is only given. On the date of distribution, dividend payable to non-cash asset, any difference will be recognized in PL as a gain or loss on distribution. So difference will be transferred to PL, not to retain earning, not to retain earning. चलेगा? Correct. Let me take one more example. You can add on example यहीं पर in the Ind AS Saaransh book. Correct. Now, suppose number of shareholders 1000, dividend distribution either take 1 pen or cash of rupees 400. Understood? Option has been given. On the date of declaration, suppose the date of declaration was 1st May, when it was declared, fair value of 1 pen was 500, and on this date it was estimated that 40% of shareholders will opt for cash settlement. It was estimated. Then on 31st May, it was actually distributed. That time the fair value of pen was 515. Now actually 60% of shareholders opted what? Opted cash. Understood? Bata. Question you have understood? Bata. On 1/5, what will be the dividend payable? So it will be 1000 into 40% into 400 plus 1000 into what? 60% into what? 500. They will take pen na? 500. Total is what? Total 4 lakh. पक्का ना? 4,60,000 बोलना रे. So what journal entry will do? Retain earning account debit dividend payable at this point of time. Then on 31st May, on the date of distribution, what is the dividend payable? 1000 into 60% into 400 plus 1000 into 40% into 515 na is equal to 4,46,000. So how much decrease? How much decrease? 14,000. So we'll pass one journal entry what? Dividend payable will be debited. Dividend payable account debit to retain earning. They may ask you this question or this question. They may ask you this too na. You can do. In MCQ question, they will ask anything. Either they will ask this or this. No, PL not. This changes in dividend payable. PA will come when you will pass the distribution journal entry. One second. Distribution journal entry. This is the changes in the amount. Journal entry बता दे. बताओ. On 1/5, what journal entry? Retained earning. Account debit to dividend payable. How much? 4 lakh 60,000. This journal entry you understood. Then on 31st May, first you will do reassessment of dividend payable. Nah? So now as per the current scenario, dividend payable become how much? 4 lakh 46. So you need to decrease the dividend payable. So dividend payable account debit to retain earning how much? Decrease by 14,000. Now you will do distribution journal entry now. So dividend payable how much? 4 lakh 46,000. Let us say inventory only. To inventory. So how many pen? 1,000 into 60% into what is the cost price? 40%. Sorry, my mistake. 40% 60% opted for cash. My mistake. 40% into what? 400. At their carrying amount. Carrying amount will be the cost price only. How much? 1 lakh 60,000. How much cash you have paid? It is 1,000 into 60% into 400. How much? 2 lakh 40,000. This difference is how much? Debit or credit? So PL account debit how much? 2 PL how much? 46,000. Understood? Now understood? Chalega. So they may ask this as MCQs or they may ask this as an MCQs. Read the question carefully and then give the answer. They may ask this also, but I don't think rare chances. They ask this now, most of the student will do wrong. They ask PL now, most of the student will do wrong. Have you understood this point? Correct now. Chalega. Okay. The example I have taken to write down some example taken by CJ. Otherwise, we'll find out where is the question. Okay, sir. Done. Appendix A to Ind AS 10 is also done. I just like to inform you one more point. I've already said that MCQs PDF will be given to you. Let us go to MCQs of Ind AS 10. MCQs PDF chapter wise will go and Ind AS 10 will go. So these are the MCQs given. You will find out there is one question of that nature. This question. Moon Limited, having issued share capital of 15 lakh shares, decided to offer two options for dividend per share. Option 1, 10 bottle of perfume. Fair market value per bottle is 75. Option 2, dividend payment of 700 in cash. In cash only, no? Dividend payment of 700 means in cash. The probability of shareholders selecting non-cash in relation to cash option is estimated at 60:40, 60% and 40%. Calculate the amount at which dividend shall be initially recognized. Later on, if on the date of settlement, FMB fair market value is 90 and according to the ratio of non-cash to cash become 80:20, then how much amount shall be debited to equity? Equity means return earning. Equity means return earning. Can you do by room? So properly designed question I have given in simple way. Means when you are reading my exam, it is very simple to understand. When you read in para, it is difficult to understand. In exam, this type of question will become difficult when you are not able to follow the information. Understand now? What I want to say, if I have given in this way, na, this is easy to understand now. So you feel easy, but in exam, same question may become difficult because that will be given in para format. Got this point? Are you able to understand? Now do. Let's see. अरे option मत देखना. Don't see the option. Option दिख गया? हाँ? चलो now calculate दिख. But you need to calculate ना. Now you don't do back calculation. Option is given, then you will say, "Arey sir, I can do back calculation." Actually, I should remove this answer from here. टाइम ही नहीं मिलता है. कितना काम करे बताओ. Don't see my solution, huh? Hmm? My answer came. 19 करो. Change you why you have calculated. First do point number 1 na. Why you are doing change? First answer is what? This. This only na. Are you getting this? And of course, this is the only option. So there is no need to calculate what? The other. Smart work. So this is only the correct. Smart work is that only. If you are 100% confirm that this is correct, so don't calculate second one. You can calculate also changes. I hope you have understood. Correct. Then second, what they said 15 lakh. It will become 80% now. 80% into 10 into what? 90 na? Into 90 na? You have not done into 90. This is 15 lakh shares. What you have done? But face value is not given only. But nominal value is not given na. Arey. वाह रे वाह. In this MCQ is also assumption. नालायक है. This too you can do na. Then find out that changes. You can do it. So what I want to say, this is ICI BOS question. When I have seen this question for the first time, I said, le. Means they are going to what? To a very deep level. Not asked in exam, but if this type of question they are asking, and if you are not doing concept, so can I say then you'll exam will not be able to write. So now with this appendix A to Ind AS is 10 is completed. Now can we start a new chapter? Okay, sir. Correct? Yes. So we'll start a new chapter in Ind AS 2. Simple chapter. Ind AS 2. Inventory. Now this is the only chapter which you are doing from CA foundation. In CA foundation inventory, then CA into AS2, now Ind AS 2. So nothing to teach in this chapter. What to teach? What is fine? The inventory means what? What do you mean by inventories? What do you mean by inventory? Bolo. The inventories are asset. Of course, it is an asset. It is an expense. Inventories are asset which are held for sale in the ordinary course of business. Which are held for sale in ordinary course of business. Means can I say if you are manufacturing organization, correct? Or you are a non-manufacturing organization. So this is nothing but finished goods for what? Manufacturing. And for non-manufacturing it is stock in trade. We call it stock in trade. Correct. Or held in the process of production. Held in the process of production but till now not produced. So this become WIP. But here we do not have WIP. Or held in the form of materials or supplies to be consumed in the process of production or for rendering of services. So held in the form of material supplies to be consumed in the process of production or for rendering of services. So these are nothing but raw material and this is nothing. Correct. Means can I say for service industry, for example, I am also providing services. So I am also using some asset for rendering my services. For example, right now I have a stock of our inventory. You can see stock of batteries. Stock of batteries. So every class I use 2 battery. Correct. So whatever is left, that is my inventory only now. These are my inventory because this is used for providing services. So these six batteries are my inventories. Got this point? And once I have consumed it, that become expense. That become expense. Got this point? I think no clarification required. Simple. But then also some point we need to understand. When I am saying, just try to understand. When I am saying material or supplies, material. So there are actually two type of material. You all know. One is known as what? Direct material. One is known as what? Indirect material. Direct material, indirect material. No doubt about direct material. Direct material means raw material. When we say raw material, it means what? Direct only. And for this, Ind AS 2 will be applicable. For this, Ind AS 2 will be applicable. No doubt. But a question arises about indirect material. Now, I'm not defining direct, indirect, that you know. Whether Ind AS 2 will be applicable for indirect material. Whether Ind AS 2 will be applicable for indirect material. Yes or no? What do you think? Whether Ind AS 2 will be applicable for indirect material. Yes, means थोड़ा doubt तो है. You are thinking means doubt है. Means whatever you have done in CA Inter, proper understanding is not there. Then also doubt is there. You are thinking means doubt is there. Clarification required. Clarification required. So indirect material are also of two types. Can I say? So can I say it can be held for production purpose? Either it can be held for production purpose or it can be held for distribution purpose. Distribution purpose. Held for production or held for distribution. Correct. Let me take one example. Suppose we are manufacturing this mobile. So mobile produce completed. Correct. Can you sell without packaging? Can you sell without packaging? So there is one primary packaging. There is one primary packaging. That primary packaging is a part of production. That is held for production only. That is primary packaging. Means without that, it cannot be sold in the market. Understood? So one is known as primary packaging. Primary packaging. Understood? Correct. But can you say once it is packed, then it will distribute it? So you will not distribute one by one now. There will be some lots. Lots can be 1000 units. So you will do some secondary packaging. Suppose carton. That is known as secondary packaging. Are you getting? Secondary packaging means for distribution purpose. For distribution purpose. Or you might have gone to buy some gift for your close friend. Have you purchased any time gift for your close friend? Don't have close friend. Huh? Now I said you purchased for your close friend or not? Arey, I'm asking yes or no. Why you are discussing? I'm not say I'm asking from you. Not, why you have or not? Don't ask. You have till now not purchased any gift for close friend. See na. For your friend. Chalo, for your friend. Yes, sir. So can I say it is quite possible after purchasing that some gift packaging is there. So that become what for distribution purpose. That is what secondary packaging. That is known as secondary packaging. I have just given one example. Don't go into that emotions, huh? Secondary packaging means for distribution purpose also packaging required. Now example do you have understood? Now my question to you all, whether this primary packaging is an inventory or is not an inventory. It means Ind AS 2 will be applicable. Whether this secondary packaging is an inventory or not an inventory. Huh? Means you are saying Ind AS 2 will not be applicable. Huh? Why? Hmm? What I am saying, just try to understand. Yes or no? I'm asking. If you are saying no, give me reason. Everything will be charged to PL only. Inventory will be also charged to PL only. Inventory will not be charged to PL. Sometimes it will be charged to PL only na. Inventory will become expense. I mean right now, suppose you purchase some secondary packaging and till now it is not used. So whether it will be charged to PL? Whether it will be charged to PL? No na. It will be charged to PL when you have used it. So till you have used, you need to apply some Ind AS or not. The valuation will be done as per Ind AS. I am saying whether it is inventory or not. No, why? देखो one second देखो I said apply definition. You are giving reasoning on if words interview में ऐसा बोलेंगे ना बोले जाओ. If you give reason like this ना store spare like this they will say bye bye. Apply definition. Before this what I have done? Definition. Are you applying that? You are not applying that. Apply that now. What is given? Everything is given in the definition only. Held in the form of material or supplies to be consumed in the process of production, not for distribution. Already I have said. One second, please don't answer as per your previous classes. Oh, if but no. I have already given the answer. Explanation given. We have read the definition first now. Then only I am asking that question. I am just improving your answer. How to improve your answer? If you say like this, no, and you will not give proper explanation, so your answer is not correct. You should write on only held for which are held in the process of production. Therefore, this is inventory, but this is not inventory. Ind AS 2 is not applicable. Ind AS 2 is not applicable. Have you understood this point? For this 2, Ind AS 2 is applicable. Chalega? Got this point? Okay, sir. Now understood. Now one more point, one more clarification required. Held for sale in the ordinary course of business. Now one doubt will come. So what do you mean by ordinary course of business? Means suppose I have a projector. This is my projector, and now I don't require this projector because I'll buy a new projector. So this will be also held for sale only. This will be also held for sale now. It is in good condition. It can be sold. So whether this projector will become inventory, correct? So what do you mean by ordinary course of business? What is the meaning of ordinary course of business? So ordinary course of business is not defined under Ind AS. It is not defined. Not defined. Got this point? But you have done AS5. AS5 means you have done ordinary activities. In AS5 we have done ordinary activity. In Ind AS it is not defined. Means can I say as per Ind AS it is a matter of judgment whether it is ordinary or it is not ordinary. However, already I have said under Ind AS there is no concept of extraordinary item. There is no concept of extraordinary item. And can I say just try to understand definition was not required also because every businessman knows what is their ordinary activities. Correct now. So definition was not required for this. Definition was not required, but if you want definition, we go to AS5. AS5 says that ordinary activities are those activities which are undertaken as a part of business and which are incidental to business. Means any activities which are undertaken as a part of business or which are incidental to business become ordinary activities. Correct? Understood? So this is not defined. You can write on not defined. You can write on not defined means it is a matter of judgment. It is a matter of judgment. Let me take one example. One beautiful question was asked in CA final old scheme of syllabus. Old scheme means when there was accounting standard. So I like this question personally. But till now, in new scheme of syllabus, I don't think so this type of question has been given. But what I found that in CA Inter, similar question was asked in RTP. Because AS2 is there. The similar question was given in CA Inter, RTP till now in CA Inter exam also they have not asked. But it is a very good question. Where is that question? Because night limited. Question number 24. Come to question number 24. Correct. Intentionally, I have included this question in my question bank because this is also a question of ICA resource only, but not in new scheme. But very beautiful question design. Let's see how you are reacting. Night limited sales beer to customer. You know beer? Very good. Chalo. Some of the customer consume the beer in the bar. You know bar? Very good, yaar. You know everything. Some of the customer consume the beer in the bar run by Night Limited. While leaving the bar, the consumer leave the empty bottle in the bar. Of course, we'll leave only. We'll not take into our home. We'll leave only. You take. You don't take, na. Huh? Leave the empty bottle in the bar. I don't drink. Huh? You drink. I don't drink. The consumer leave the empty bottle in the bar, and the company take the position of this empty bottle. And company take the position of this empty bottle. Of course, they will take the position. The company has laid down a detailed internal record procedure for accounting for this empty bottle. Detailed accounting procedure means the amount, the value is not immaterial, it is material. So from this we have understood this is material. From this point we have understood material. Correct? Detailed internal record procedure means material only. Got this point? Which are sold by the company by calling for tender and this was sold by calling tenders. Whoever give higher quotation to them, it will be sold. Correct. Keeping this in view, they have asked two questions. First question is what? Don't read now. First question is what? Whether it is an asset. First question. So first, whether it is an asset means that empty bottle which are now in the possession of what? Company. Possession. Who is the owner? Customer. Customer is the owner, but now under the possession of Night Limited. So whether it is an asset for Night Limited, yes or no? How many are saying yes? Why? 100% correct. Once again, we have done the definition of asset. Somewhere I have given asset means what? Two conditions. Ownership is not at all required. Once again, those who are saying no, it means they are not able to apply the definition. They are not able to apply definition. Once again, try to stick with the definition. I have given definition. Asset means two conditions: control and future economic benefit. Yes, there is a future economic benefit because that can be sold, and that is under the possession, means under the control, where the customer will come back. Even though they come back, whether they can demand, no. They can demand empty bottle. Give my empty bottle. Now I am in full. Now I am in full hose. Just try to understand. Just try to. I'll give you says one similar example. Similar example. My father is a grocery dealer. Grocery dealer. What happened? He's a wholesale grocery dealer. Same thing happened. Wholesale. So we purchase rice bags of 50 kg, 25 kg. But sometimes retail customer will come. Now will not say no because my father said customer God. So don't say no to anyone. Means we are not retailer. We are wholesaler. Means but some customer will come and they will ask half kg. We'll open the bag and will sell the rice. So होता है. Many customer will come and ask what? Rice in retail. So at the end of the month, now there will be many rice jute bag empty. And my father will also call some person and will sell the jute bag. Understood? That is also an asset, na? For me. It is an asset because it is under the control of what? My father. Under the control of my father. In this case also, under the position of Night Limited. The customer, even though coming back, they will not come back. Impossible. But even though they come back, they cannot demand this empty bottle. They cannot demand this empty bottle. Understood? Correct? You just do sometime. Correct now. Do sometime you'll understand. Got this point? Okay. Which means it is an asset. Decide whether stock of empty bottle is an asset. Yes. First answer yes. Second, now they have asked whether this asset is an inventory and will be accounted as per Ind AS 2 or it will be considered as sale of scrap and recorded in the other income of SOPM. Understood? Means in simple word, whether it is an inventory or not an inventory. Inventory or not an inventory. You are saying not an inventory. How many are saying yes, it is an inventory? Yes. It is held for sale in ordinary course of business. It is ordinary course. Normally it happens. It is ordinary. It is ordinary. Normally customer will leave empty bottle and they will do this. And can you say it may not be a part of business, but it is incidental to business. It may not be the part of business, but it is incidental because of business it happens. And ordinarily it happens only. Normally customer will come and leave and will call the tender and will sell. It become an ordinary course of business. Therefore that stock of empty bottle will be considered inventory and Ind AS 2 will be applicable. Same answer has been given by institute also. Good question or not? Very good question. From my point of view, sometime they will ask this question. Therefore, I have taken this question in my question bank. I have taken this question in my question bank. Correct? So, I am not increasing the number of questions. I am increasing that this type of question can be asked as per my research. because this is also question of ICA only, not in new scheme but in old scheme. And if they can ask this question in the RTP of CA Inter, why they can't ask the same question in what? CA final. They can ask. Correct. One doubt will come. Hello sir, we have understood Ind AS 2 is applicable. But the cost price is zero. Cost price zero na. NRV can be more than cost price. Means in this case cost price for night limited become nil. NRV can be for one bottle, suppose 1 rupees. Suppose for one bottle it is 1 rupees. मान लेते हैं. Now whichever is lower is nil. So as per practical understanding, I will say practical understanding, this type of question they will not ask in exam. So you can write down or you can improve your answer by writing that the cost price will be nil. Therefore, such type of inventory will be valued at nominal value. You will be recognized at nominal value. Nominal value means only for disclosure purpose, insignificant value. 10 rupees, 100 rupees in total. In total. Suppose you have 1000 bottle, so for 1000 bottle the nominal value will be rupees 10. Correct? So it cannot be recorded nil now, but you need to recognize the inventory in balance sheet to write on stock of empty bottle 10 rupees. Only for disclosure purpose. If you want to write down. If such inventory will be disclosed in the balance sheet at nominal value as the cost price is zero. Such inventory will be disclosed in the balance sheet at nominal value as the cost price is zero. Understood? Chalega? Okay. Now the definition is completed from my point of view. Definition completed. Now what is the objective of this chapter? Objective of this chapter is to value inventory on each reporting date. Correct? So valuation will be done at cost price or NRV, which is lower. Everyone knows cost price or NRV, which is lower. NRV means net realizable value. But can I say initial recognition will do? Initial recognition means at the time of purchase or when it is produced. Initial recognition always we do at cost price. So this valuation is done on which date? On reporting date, not on initial recognition. So when you have purchased it, it was valued at cost price. On the date of purchase, we never value at NRV. Correct? So it is cost price on initial recognition. Subsequently means what? At each reporting date. So normally whenever there is an asset, we think about initial and subsequent recognition. So when we say initial recognition will be always at what? Cost price. When we say subsequent recognition means at each reporting date, then we'll compare cost price with what? NRV, and we'll take lower one. Understood? Now can you see we need to understand what is cost price and what is NRV? How to identify cost price and what will be the NRV? So for that discussion, so cost price, we need to find out what are the component of cost price. Now component of cost price means what are included in cost price and what are not included in cost price. Correct? So can you say when I say component of cost price, so we need to understand from manufacturing and non-manufacturing organization. When I am saying non-manufacturing and when I am saying manufacturing, correct. So non-manufacturing will purchase what? Stock in trade, and they will not convert stock in trade in some other finished goods. So for them, stock in trade is only what? Help for selling the ordinary course of business. So for them, cost of purchase of stock in trade will become the cost price. Correct. But they will purchase what? Raw material and will convert raw material into finished goods. So first they need to find out cost of purchase of what? Cost of purchase of raw material. In this they will add what? Cost of conversion. Cost of conversion. And then if there is some other cost, that will be also added. other cost will be also added, and this will become cost price of finished goods. Finished goods na, finished goods. Chalega? Have you understood? It means if someone asks you what is the cost price of raw material in the question, if they ask you the cost price of raw material, this is the cost price of raw material, and this is the cost price of finished goods. Correct? It is quite possible in exam they ask you the raw material valuation. So this is the raw material cost price. Now we need to understand what is included in cost of purchase. What is included in cost of purchase? So can this cost of purchase and this cost of purchase will be same only, but this is for stock in trade and this is for raw material. Means in total we can say there are three components: cost of purchase, cost of conversion, other cost. Now we need to understand what are included in cost of purchase, what are included in cost of conversion, what are included in other cost. Chalega? I mean, so let us understand what is included in cost of purchase. Cost of purchase is very simple: invoice price plus trade discount or rebate plus any non-refundable duties and taxes. Non-refundable duties and taxes. When we say these two, these three, this actually become purchase price. Purchase price. If somebody asks you what is purchase price, means normally purchase account is recorded by these three. When you say na purchase account debit to creditor, बचपन वाला entry, purchase account debit to creditor, बचपन वाला entry याद है? तो with this purchase वाला journal entry was done with these three amount. These three amount. Are you able to understand what I am saying? So purchase. I don't. Purchase price is this. If somebody asks you what is purchase price, not cost of purchase. Purchase price and cost of purchase are different. If somebody asks you purchase price what? अब बोल दो यार. Purchase price means what? Invoice price minus trade discount or rebate plus non-refundable duties and taxes. Non-refundable duties and taxes means what? For which credit is available. For example, GST, if input credit is available, then it become refundable, non-refundable. Refundable, then don't add it. But if input credit is not available, then you add it. So non-refundable means credit is not available. Not available. When you add what? Directly attributable expenses to bring the inventory in present location. Present location means, can I say, if non-manufacturing, so where you will bring? In warehouse. If manufacturing, where you will bring? In factory. So it will depend upon where you are bringing. That all expenses once you added, it become what? Cost of purchase. Become cost of purchase. So this all directly attributable expenses you will be adding, then become cost of purchase. So can you give me some example of these direct expenses? Transportation expenses, then toll tax means you can say any taxes on purchase or toll tax, or we call it what? Any other tax, octroi also you can say, correct? Or insurance in transit, loading and unloading charges, etc., etc., etc. Correct? All will be added. So this become cost of purchase. This is cost of purchase. So for non-manufacturing, it will become cost of purchase of stock in trade. So that become cost price of stock in trade, because nothing will be added now. But for manufacturing, it is cost price of raw material. It is the cost price of raw material. So somebody asks you what is the cost price of raw material, you need to stop yahan par. You need to stop yahan. Then can I say, of course, we need to find out cost price of finished goods. So we'll add cost of conversion. So we'll add cost of conversion. What are included in cost of conversion? There are two items. One is direct labor, one is production overhead. Direct labor, you know, all the manufacturing wages which you are paying to direct labor are direct labor cost. So direct labor, I think nothing to explain. Now production overhead, what do you mean by production overhead? Production overhead means what? Overhead incurred for production. तो आंख से आंसू आ जाता है ऐसा आंसर सुन के. जबरदस्त means now what to say, answer is correct or wrong? Jabardast. This is a CA student. He will answer everything. I like this attitude. कुछ तो बोल के आओ. But production overhead means what? Can I say it means indirect material, indirect labor, indirect manufacturing cost. Now you know indirect labor, indirect material, indirect manufacturing cost. Correct? So this is known as the sum total of these will be what production overhead. The production overhead is what? Indirect material, indirect labor, indirect manufacturing cost. Now for calculation purpose, these all production overhead are of two types. One is known as variable production overhead, one is known as fixed production overhead. Now you know what is variable, what is fixed, that I am not teaching you. But for allocation purpose, what Ind AS 2 says that variable production overhead will be allocated to each unit on the basis of actual production. On the basis of actual production. So this will be allocated to each unit on the basis of actual production. Understood? Correct. But fixed overhead, Ind AS 2 says, I don't know what your costing teacher says. I'm not teaching you costing. Whether I'm teaching you costing, I'm not teaching costing. Correct. Costing is same thing you have done. So what is the difference between the cost price calculated as per costing and the cost price whatever we are calculating as per Ind AS 2? Whether they are same or different. Cost price calculated in costing subject and cost price calculated in Ind AS 2. Difference is it is same. Primary breaking, so I have also said everything remains, item remains same, item can't be changed. What is there direct, here also direct. What is there indirect, here also indirect. So direct, indirect, so I have also said, they have also said. Correct. Now item remains same. What is my question? Cost price calculated in your costing subject and cost price calculated in FR subject will be same or different? It is different. Different. Whatever you do costing, that is always an estimated cost that you calculate for decision making. That you calculate for decision making, whether to produce or not to produce. Understood? That is for decision making. Before production, you estimate, but here it is actual. For disclosure, for recording purpose, that is on actual basis, and that is on estimated basis. Are you getting what I am saying? So costing is basically for decision making, whether to produce or not to produce. What can be our cost price? Whether we can add how much profit. So what can be our possible sale price? What can be our possible sale price? But this is on actual basis. Therefore, can is always based on actual production. Whatever units, whatever variable overhead you need to allocate, that should be always based on actual production. But fixed overhead, what Ind AS 2 says, it will be allocated based on normal production or actual production, whichever is higher. Whichever is higher. Normal production. Now, I hope you know about normal production. Normal production. So, normal production will be given the question, means any production which can be generated with the normal level of efficiency. That is known as normal production. Normal production will be given, actual production will be also given. We'll take higher one. And based on that, we'll allocate what? Fixed overhead to each unit. Correct. Got this point? Understood? बोलना रही. Now, whichever is higher, why higher? Why higher? बोलो. Why higher? Said yes sir ना, इसलिए पूछ रहा हूँ. मतलब I think that ना teaching CA final is so easy ना, because every time you'll say yes sir. मतलब सब समझ में आ रहा है सर, मजा आ रहा है, पढ़ाओ, सिलेबस कंप्लीट करो. सर प्लीज कंप्लीट द सिलेबस फास्ट. We want to go to other subject. Sir. Chalo, let me explain. The same question was asked in exam, whatever I am doing. And this is an exam question only. Correct? So there can be three cases. Actual production maybe 1 lakh, maybe 1,25,000, maybe 75,000. Correct. So in this case, what will be the fixed overhead per unit? So can you say 1 lakh, 1 lakh? Can you say rare situation? 1 lakh is normal. Actually, also you are producing 1 lakh. Correct now. It is very rare situation. But chalo, theek hai. So in this case, 10 lakh divided by what? 1 lakh. Understood. It become 10 rupees per unit. So how much is included in cost price? So it is 1 lakh into 10 means 10 lakh means all the cost has been included. Entire cost has been included. Correct only. Nothing wrong na? Nothing wrong. Second. Once again, can I say actual production is more than normal production? You will do 10 lakh divided by what? 1,25,000. Now this is coming how much? 8 rupees per unit. So how much is included in cost price? 1,25,000 into 8. Can you say all the costs are included? All the costs are included. See, normally this is also rare situation. See, normal production is 1 lakh and you are generating more than 1,25,000. Correct now. It is only possible when you have wrongly calculated normal production. Means you don't know about normal level of efficiency. Are you getting? I'm saying rare, but possible to hai. Understood? I will say this is more possible situation. Due to inefficiency. Due to inefficiency. Correct now. In this case, but if you will do by actual production, it will be not correct. And therefore they said normal or actual, whichever is higher. It is coming 10. And you can see how much is included in the cost price. 75,000 into 10 means 7,50,000. It means 2,50,000 is your abnormal loss due to inefficiency. You are not able to produce what 25 the unit. So that will be charged to profit and loss account as an expense. So anytime abnormal loss will never be included in the cost price of inventory. Abnormal loss will never be included in the cost price of inventory, and therefore in this abnormal loss, in this case nil, in this case nil, in this case it is 2,50,000 which will be charged to profit and loss account, which will be charged to profit and loss account. Understood? Have you understood? Same question was asked in one of the CA final exam for 5 marks. They have given two situations. I think they have given 2 and 3 in that. Easy. Now simple. So you need to remember what normal production or actual production, whichever is higher, whichever is higher. Understood? So you have understood cost of purchase, cost of conversion. Now other cost. Other cost means what? Once the unit is produced, okay, some more expenses are required to bring the inventory in condition of sale. For example, packaging, primary packaging, or you need to transport from warehouse to from factory to warehouse, from factory to warehouse. So transportation expenses. There may be some modification expenses as per the uh, as per the modification required by some customer. So there may be some more modification expenses. So there may be other expense to bring the inventory in condition of sale. So that will be also added. That will be also added. Expenses to bring the inventory to the condition eligible for sale will be also added. This all become the component of cost price. Can I say apart from this, whatever is not given are not included in cost price? What are not included in cost price? Administrative expenses. Selling and distribution expenses, abnormal loss will not be included. Storage cost, unless it is necessary for production. What they say means any storage cost, if it is necessary for production, to include it. For example, storage cost of raw material, necessary. But storage cost of finished goods, not necessary for production purpose. Therefore, that will not be included. That will not be included. So, what is necessary will be included. And borrowing cost, actually borrowing cost Ind AS 2 is silent for borrowing cost. But we need to refer Ind AS 23 for that. That is AS 16. Now, Ind AS 23 says that if it is a qualifying asset, it can be included. Now, of course, you know about qualifying asset. Detailed discussion we'll do about inventory in Ind AS 23. So, borrowing cost subject to Ind AS 23. We need to think about we need to apply the condition of what Ind AS 23 to write down. If you want to write down, if qualifying asset, it may be included. But if it is not a qualifying asset, it will not be included. So, discussion will do there only. Qualifying asset included, not non-qualifying asset not included. चलेगा. Can you ask you some question if you have understood this much? बताओ. बोलो बोलो पूछो. You want to ask a question? Yes, I am also open. You can ask. Can I ask one question? This much you have understood. My question is that depreciation will be included or will not be included in the cost price of inventory? 100% correct. Very good. Just write down. Excellent. I'm happy. Write down. Depreciation will be included. Depreciation or amortization both. Amortization we say for intangible asset. Depreciation we say for property, plant and equipment. So better write down depreciation and amortization. ठीक है ना? You're writing both ना? Depreciation and amortization will be included in cost price if assets are used for production process. For production process. For example, right now I am also using software for producing what recorded classes. Without software I can't record. That amortization of that intangible asset will be included in the cost price of what? My inventory. My inventory. This simple example I have given. Correct? Yes, sir. Got this point. Any question you have? Understood? Bolo. Now, you have understood abnormal loss. What about normal loss? Normal loss means normal loss will be included or will not be included? Will be included. One question only for your revision purpose, because I have a fear that sometime with MCQ this type of question can be asked. But this type of question you might have done where? CA Inter. Whether I have taken that type of question or not. I have removed. So I'll create one question. Suppose, example, you purchase 10,000 units. Correct? Normal loss is 5%. Got this point? And you received 9,000 units. You purchase how much? But you receive how much? What is the total loss? 1,000. Out of this, how much normal? Normal is what? 500. Abnormal is what? This too you have understood by your own. Abnormal is 500. And they will give you the cost of purchase. I am saying cost of purchase, not purchase price. This is cost of purchase. It is quite possible. First, you need to calculate cost of purchase in exam. Means they have given all the items, invoice, price, trade discount, add all directly attributable expense, that I have given cost of purchase. Correct now. The cost of purchase, suppose 10 lakh. Can you calculate cost price per unit? Only for your revision purpose, because due to this MCQs now, quite possible they can create this type of question. So what you have done, 10 lakh divide by 9,500. Very good. Means you know. Means you will divide by number of units after normal loss. So 9,500. So your cost price per unit become 105.26. Correct. And then they may ask you one more question. What is the abnormal loss? The abnormal loss will be 500 into what? 0.26 is equal to 52,630. Excellent. Understood. So they may ask this type of question. Chances are rare. Only for revision purpose I have done. Only for revision purpose. But in CA interlevel and CA foundation level we do this only. Okay sir. Done. This is also done. Now coming to, there are three special points. So today we'll take these three special points only. First is about joint product and byproduct. I will say this is one of the favorite questions of the institute, both in CA inter and CA final. And there is only one question they are asking, that only. In CA inter also the same question, CA final also same question. I don't know why. They have only one question. Now joint product means what? There will be joint cost. Joint product means what? Two or more than two main product. What is byproduct? Additional. What is joint product? That is also additional product. नहीं ऐसा नहीं है, ऐसा नहीं है. Just try to understand. Suppose I'm just giving one example. Suppose you are producing milk, you are producing ghee from milk. Understood? You are producing ghee from milk. But during this production process, you also produce butter and buttermilk. You know? नहीं. Wrong example. तो मक्खन बोल दो. Makhan. Makhan, I think butter only, na? But butter is, some process is required, some further processing required. But from makhan, if you know makhan, Hindi में तो we call it makhan, English. चलो ठीक है. अरे I am not the example है नालायक. Try to understand emotions. You are going into the production process. मतलब कुछ भी मतलब example, you will not think about example. Production process में चले गए. You are put in this production process. देखिए सो नालायक. So milk is the raw material. So we are producing ghee from milk. But in that production process, what also generated? Makhan means butter and buttermilk. How many joint product? How many byproduct? Means you are saying these two are byproduct. and this is what main product, but all are sellable into market. You know, Amul industry buttermilk, Amul ghee, Amul butter, all are sellable in market. Means there is end customer for all the goods. Now say which one is main product, which one is joint product, which one is byproduct. All are joint. Just try to understand. No. For accounting, I don't know what you have done in costing, but for accounting, what they say, see, all are product sellable in the market. But if the value of this is material, this is material, and suppose this is immaterial, so this two will be what? Joint product, and this will be what? Byproduct. Means you need to identify whose value is immaterial. If suppose all are what? Material. Suppose all are, I am saying material, material, material. So all are what? Joint product. Means from accounting point of view, you need to find out which one is material, which one is immaterial. If suppose this is immaterial, I have taken one assumption. I am not saying this is always immaterial. If it is immaterial, from entity's point of view, it become byproduct. It become byproduct. Understood? So that is the meaning of byproduct from accounting point of view. I don't know what you have done in costing. Correct. So incidental, whatever. Can I say in a production process, always we know butter milk will be generated. So that is not incidental. That is known to us. That is known to us. But from value point of view, we'll decide whether it is byproduct or it is not byproduct. So what Ind AS says that whenever there is a joint product, first find out joint cost. And that joint cost will be allocated to each product, each main product in the ratio of sales value. In the ratio of sales value. But that ratio they have given two preference. They have given two options. Well, it will be allocated on the basis of sales ratio of each joint product either at the point of split off. Means that sales value calculated at the point of split off. I think you know about split off. At a time when they are actually splitting. At the point of split off. But if suppose you are not able to determine the sales value of those products at the point of split off, then take sales value at a time when the production is completed. When the production is completed. First preference will be given to what? This. If this is not determinable, the second preference will be given to this. Means always this will be the first preference, but if it is not determinable, then this becomes second preference. Understood? As per the information given in the question, normally they give only one ratio. Now coming to byproduct, what they have written, if the amount is immaterial, understood? If the amount is immaterial, then it will be measured at NRV. Then we'll do measurement at NRV, net realizable value. Now net realizable value, once again the same definition, estimated selling price minus estimated selling expense. And that whatever NRV you have calculated, that is deducted from the joint cost to calculate joint cost. Understood? From the total joint cost to find out the joint cost for allocation purpose. Correct? So, and that is deducted from the cost price of main product or joint product. Simple. We'll take one question on this. Joint product understood, byproduct understood. Now the question arises about scrap material. What is the difference between byproduct and scrap material? As per accounting, both are same. But as per meaning, scrap means it is not sellable to the end customer. It is sold in the scrap market. It will be sold in the scrap market means it is a wastage. Scrap material means wastage. But that can be also sold. That can be also sold in the scrap market. But the treatment of scrap material will be same as what? Byproduct. Means it will be also valued at NRV and deducted from the cost price of main product or joint product. Treatment remains same. Treatment remain same. Chalega? It means can I say for byproduct we are not determining cost price. There is no need to find out the cost price of byproduct. Only find out NRV. Correct. So we find out the cost price of only main product or joint product. Chalega? Yes, sir. We'll take one question on this. I think today time will be over. The same question I think in CA Inter also you have done, but very popular question. So I can't skip this question. Question number 8. Same question might have came in your exam also. In a manufacturing process of Vijay Limited, one of the byproduct BP emerges beside two main product MP1 and MP2. So they have given BP means byproduct, MP1 and MP2 are main product. Details of cost of production process are as under: raw material, wages, fixed overhead, variable overhead. Whenever question is silent about normal production and actual production, always assume normal production and actual production are same. Therefore, entire will be included in what? Cost price. That assumption will take. Then they were MP1, what is the output? 6250, MP2 5000, BP means byproduct 1600, and the closing stock as on 31st March 2012 is 800 and 200. Average market price of MP1 and MP2 is 80 per unit and 50 per unit respectively. Byproduct is sold at 25 per unit. These are 25 per unit. There is a profit of rupees 5000 sale of byproduct after incurring separate processing charge of 4000 and packing charge of 6000. Correct? Means what is the selling expense? 4000 and 6000. 6000 were realized from the sale of scrap. Calculate value of closing stock of MP1 and MP2 as on 31st March 2012. Very simple. I will only do on behalf of you. Correct? Nothing to explain. First we'll find out joint cost. So it will be 1,60,000 plus 82 plus 58 plus 40. This will be joint cost. So that is already calculated 3,40,000. 3,40,000. Okay, so from this what will deduct? NRV of byproduct. What is the NRV of byproduct? So 1600 into 25. How much? 40,000. Minus how much? Minus 10,000 means 6,000 plus 4,000. So NRB become 30,000. NRB. This is NRB of byproduct. Then what is the realizable value of scrap material? That will be also deducted. So they have deducted, you can see 30,000 and 6,000, and this becomes the total joint cost after deduction 3,04,000. This will be allocated in the ratio of sales value of main product. So first we'll find out sales value of main product. What is the total output given? 6250 and 5000. What is the sale price per unit? 80 and 50. This becomes the sales value 5 lakh and 2,50,000. Understood? So once again, what I say sales value means total sales value, not the sale price per unit. So don't allocate in 80 is to 50. Allocate in sales value, that become 2 is to 1. 2 is to 1. So this become the ratio of allocation 2 is to 1. We can allocate kar do, because you have calculator, you can allocate, and this become the total cost price of MP1 and MP2 separately. Then divide by number of units. Total number of units is what? 6250 and 5000. You can divide and you can find out cost price per unit. You can say cost price is less than what? Sale price. Means can say NRV is more than what? Cost price. Therefore valuation will be done at cost price. Now you have been given the closing stock 800 units and 200 units, multiply with the cost price. You will get the value of closing stock. Super easy question. At CA final level to super easy. CA enter it can be a good question. Understood? Only one point I need to discuss here. They have given what? There is a profit of 5,000 in sale of byproduct. Understood? And this information they have given only to confuse you. Because for byproduct we don't want cost price. We want NRV. NRV means sale price minus selling expense. They have given profit only to confuse you. Suppose you consider this point, one mistake you will do and entire solution will be wrong. So they have given only to confuse you, because normally whatever information given, we try to use it. And suppose you have used it, your answer will be wrong. Then 5 marks will become 0 marks. Got this point? So you just write down this information is totally bakwas. Bakwas. You know bakwas? I hope you have understood why it is bakwas, because we don't require cost price, we require NRV. Chalega. Chalo. Today this much only. Okay. So today this much only. Now, I think up to this too you have understood. Please complete your Ind AS 37, Ind AS 10. Your 2 chapter completed. Now what happened? Ki every day one chapter will be completed, and if you not do that question, it will be pending, and then there will be a lot of accumulation. Then when I'll come to CA final level chapter, you will find difficulty. CA final chapter means once I will start Ind AS 36 impairment, it means we are entering into CA final. Then Ind AS 36, Ind AS 36, then I will do share based payment. After share based payment, uh, I will do financial instrument chapter. Financial instrument will take 9 to 10 days. Yes, so we'll come to CA final discussion, which will be totally a new chapter for you. So when I'll come to that level, then this small chapter you will not read only. That time accumulation will be there. So please start studying, do all the questions so that if you have any doubt, you can ask me. Okay? Okay, so thank you very much for today. We'll meet tomorrow. Till then, bye bye. Take care. Enjoy your remaining day. Hmm? No, no. Tomorrow is Sunday. Sunday no class. Tomorrow means what? After Sunday. Sunday will be no class. Sunday can be class, but on my prior information. Means suppose some sudden holiday आ गया, then why to waste time Sunday class लेने? But Sunday why I am giving one day to you? Because I have realized that if you will not study, then कुछ फायदा नहीं है पढ़ा के. So इसलिए I started giving Sunday as holiday. So tomorrow you use it for completing what? Completing what? Your entire whatever we have done. Okay? Chalo. Bye bye. Live online class for you also Sunday holiday.